Welcome to Study Session 8, Audit of Profit and Loss Items. Introduction. In this lecture, we shall examine the auditing and internal control checks procedure for items of income and expenditure. Some of the tests which are carried out are not simply about whether transactions have been accurately recorded in the books. They are about discovering whether the staff involved are obeying company rules and procedure. Objectives. At the end of this lecture, you should be able to describe the audit objectives and procedures for items of profit and loss accounts. Audit objective on purchases and expenses. The audit objective is to carry out audit work so as to gather sufficient appropriate evidence that purchases of goods and services relate to the company being audited. Occurrence. All purchases of goods and services have been recorded. Completeness. Purchases of goods and services have been recorded at the correct amounts. Accuracy. All the relevant transactions have been recorded in the correct accounting period. Cutoff. Purchases of goods and services have been recorded in the correct amounts in the nominal and purchase ledgers and any other related records, for example, stock or costing records. Classification. System objectives on purchase and expenses. The purchases and expenses system can be divided into three sections of ordering: receipt of goods and invoicing and accounting. In relation to ordering, we need to ensure that all orders for goods and services are properly authorized, and for goods and services that are actually received and are for the company. Occurrence. Orders are made only to authorized suppliers. Accuracy. In relation to the receipt of goods and invoicing, we are interested in whether all goods and services received are for the purposes of the business and not for the private purposes of any individual. Occurrence. Goods and services are accepted only if they have been ordered. Completeness. All receipts of goods and services are accurately recorded. Accuracy. Liability are recognized for all goods and services received. Accuracy. Any credits due to the business for faulty goods and services have been claimed. Completeness. It is not possible to record a liability for goods or services which have not been received. Completeness. System controls on purchases and expenses. The purchases and expenses system should have internal controls and procedures which are designed to achieve the system objectives and minimize the possibility of fraud and error. Relevant aspects include written procedures, policy on ordering from approved suppliers, procedures for obtaining credit notes from suppliers, authority levels for order limits, authority limits for making payments, authority limits for approving invoices, check signatories, defined structure of who can order what, separation of staff responsibility for raising orders for those involved in processing and paying invoices, separation of staff responsible for checking goods received from those responsible for checking purchase and posting invoices, safeguarding blank order forms, monitoring quantity and condition of goods received, All orders to be authorized by responsible person. Pre-numbered order forms. Recording arrival and acceptance of goods. Recording return of goods. Separation of staff responsible for checking and posting invoices from those responsible for payment. Numbering supplier invoices consecutively. Controls on processing invoices. Control over blank checks. Restriction of access to parts of accounting system not relating to purchases. Authorization of invoices for payment. Review of orders placed but not delivered or invoiced. Matching of invoices with orders and goods receiver notes. Matching suppliers' credit notes with goods returns notes. Confirmation that invoices have been checked with orders and goods received notes. Checking of invoices. Cut-off checks and ascertainment of goods received notes not matched by purchase invoices at the year end. Reconciliation of purchase ledger control account with purpose ledger balances. Regular reconciliations of suppliers' statements with purchase ledger balances and so on. Audit work on purchases and expenses. The key areas of audit testing for the purchases and expenses system include the following. Check evidence that invoices are supported by goods received notes and purchase orders. Check evidence that invoices are checked for arithmetical accuracy, correct coding, and entered in daybooks, ledgers, and stock records. Test numerical sequences and inquire into missing numbers, including unused copies of invoices, purchase orders, goods returned notes, and goods received notes. Obtain explanations for items outstanding for a long time, for example, unmatched orders and goods received notes or unprocessed invoices. Check that authorization of invoices are approved for payment. Check that goods returned are supported by goods returned notes and that credit notes are entered in ledgers. Check that postings between daybooks, cash books, and ledger correspond. Check that payments to suppliers are debited in full to correct account in purchase ledger. Examine all records for particularly large or unusual entries or transactions. Audit objective on income and sales. The audit objective is to carry out audit work so as to gather sufficient appropriate evidence that sales of goods and services relate to the company being audited occurrence. All sales of goods and services that should have been recorded have been recorded. Completeness. Sales of goods and services have been recorded at the correct amounts. Accuracy. All the relevant transactions have been recorded in the correct accounting period. Cutoff. Sales of goods and services have been recorded in the correct accounts in the nominal and sales ledgers and any other related records, e.g., stock records. Classification. In relation to dispatch and invoicing, we are interested in whether all invoices raised relate to goods and services supplied by the business. Occurrence. All dispatch of goods and services are accurately recorded. Accuracy. All dispatch of goods or provision of services are invoiced correctly. Completeness and accuracy. Any credit notes are only given for a valid reason. Completeness. Cutoff is applied to the recording of dispatch of goods stock records, cutoff. In relation to accounting, auditors need to confirm that all invoices and credit notes are properly recorded in the books and records, completeness and accuracy. All receipts from customers have been properly recorded, accuracy. All payments are for goods and services which have been supplied, completeness. All credit notes given have been properly recorded in the books and records of the business, accuracy. All entries in the sales ledger are to the correct customer's accounts, accuracy. Potential or actual bad debts are identified, accuracy. All entries in the nominal ledger are to the correct account, classification. Cutoff has been applied correctly, cutoff. The income and sales system should have internal controls and procedures which are designed to achieve the system objectives and minimize the possibility of fraud and error. Relevant aspects include written procedures, authority for approving new customers, procedures to be adopted for credit-taking customers, separation of staff responsible for dispatching goods received from those responsible for processing sales invoices, separation of staff responsible for dispatching goods or supplying services from those involved in processing invoices or collecting monies, pre-numbered sales, order forms, separation of staff responsible for posting invoices and maintaining customer accounts from those responsible for receipts from customers, numbering sales invoices consecutively, controls on processing invoices, for example batch totals, control over unused invoice sets, control over spoiled invoices, restriction of access to parts of accounting system not relating to sales, safeguarding blank sales order forms, authority levels for selling prices and discount arrangements, ICs or collecting monies, pre-numbered sales order forms, authorization for changes in customer data, authority for issuing credit notes to customers, authorization of selling prices, authorization of discounts, special authorization of goods on special terms or free of charge, matching of sales invoices with dispatch and delivery notes, matching credit notes with goods return notes, authority to write off debts, authorization to implement credit control procedures, authorization for customer credit limits, segregation of duties, fiscal controls, monitoring quantity and condition of goods and services supplied, pre-numbering of relevant documents, delivery notes, sales invoices, good return notes, safeguarding blank forms, and so on. The key areas of audit testing for the income and sales system include the following. Check that new customers' credit procedures are operating. Check that new accounts and credit limits are properly authorized. Check that orders are not accepted from customers within credit limits. Check evidence that sales invoices are supported by customer orders and signed delivery notes or evidence of supply of goods or services. Check evidence that invoices are checked for arithmetical accuracy and correctly coded. Check evidence that invoices are entered in daybooks, ledgers, and stock records. Test numerical sequences and inquire into missing numbers, including unused or cancelled copies of invoices, sales orders, delivery notes, and goods returned notes. Check goods returned as supported by goods returned notes and that credit note authorized. Check non-routine sales, for example, scrap sales of fixed assets for authorization. Check postings between day books, cash books, and ledgers correspond. Check entries in stock records for dispatches of goods. Check that remittances from customers are credited in full to the correct account in sales ledger. Check aged debtor analysis, and evidence of credit control procedures such as follow-up of overdue debts. Check explanations for contra and journal entries in sales ledgers. Examine records for particularly large or unusual receipts or transactions. Audit objectives on the payroll system. The audit objectives of the payroll system are similar to those of purchases and expenses system insofar as the business only wants to pay for work done and at the correct rate. Where businesses have a mixture of weekly and monthly paid employees, there may be two payrolls. The weekly payroll may be prepared by specialized staff in a separate department, whereas the monthly payroll may be prepared by a senior official of the company, particularly if it includes salary payments for senior managers and directors. In that case, the auditor will have to carry out separate tests on each payroll to ensure both are operated correctly. There are businesses where payroll can be a particularly difficult area, such as those involving a lot of casual workers, where sums are paid in cash, often with little documentation. Auditors should ensure confidentiality of information, as matters such as the rate of pay between individuals can be a very sensitive subject. The payroll system contains a lot of personal data about employees, such as rate of pay, deductions, home address, bank details, birth date, all of which is confidential information and can be used by unscrupulous individuals as raw materials for identity theft. The auditor should be very much aware of this, and it is quite often the case that only the more senior members of the audit team are allowed to access payroll data. The key areas of audit testing for the purchases and expenses system include the following. Check that authorized rates of pay are being used. Confirm authorization procedures operating with regard to clock cards, job cards, timesheets, or other evidence of time worked. Check production records for payments based on productivity. Check production records for approved list of commission payments to sales staff. Check calculations of gross pay to net pay for a sample of employees, verifying authorization for and calculation of gross pay, overtime payments, piecework payments, holiday pay, and so on. Obtain cancelled checks from banks and compare to payroll. Test non-statutory deductions from payroll authorized by employee. Reconcile movements in payroll for 2 different periods. Test starters and leavers procedures applied to payroll, that is, ensure leavers are removed at correct dates and starters started at correct dates. Check payroll summary to payroll and nominal ledger. Check if salary payments are in accordance with contracts of employment. Summary. The audit of items of profit and loss account focus on occurrence, completeness, accuracy, classification, and cutoff. The controls include organizational control, segregation of duties, fiscal control, authorization, arithmetical and accounting checks. The main aspects of purchases and expenses systems are ordering, receipt of goods and invoicing, and accounting. Similarly, The sales system can be divided into ordering and granting of credit, dispatch and invoicing, and accounting. The profit and loss items should have internal controls and procedures which are designed to minimize the possibility of fraud and error. This is the end of study session 8. Thank you.